this is one of those times where our world collides with the political world. And I'm sure they're watching and saying, well, you know what? Stock market doesn't seem to care. So there's no reason for either side to sort of acquiesce, again, in my opinion. If something starts to break in our world, then maybe cooler heads will prevail. But until something like that happens, I think they're going to continue this thing up until the 11th hour, which it turns out is probably less than 2.5, 3 weeks from today. So I do think it gets worse before it gets better in terms of the rhetoric. And I think at some point the market's going to start to behave that way.
Dan, what do you think the market is expecting out of whatever the resolution will be?
Yeah, I think that just look at the VIX right here, under 18, and it doesn't suggest that there's too much fear as far as investors are concerned. Look at where the S&P 500 is trading right now. So, I mean, I think that, like to Guy's point, that there will be some sort of agreement. I don't think it'll come with spending cuts. If you think during the Trump administration, the debt ceiling limit was lifted 3 times. There was no deal on that. This is Congress's responsibility. I think you have a speaker in the House who's got very little control over his caucus, and they're going to dictate that he kind of pushes it as far as he can here. And, you know, ultimately this thing will get resolved, because I don't think it's in anyone's best interest to have our country default on its debt, not being able to pay its bills, and all the repercussions that would happen throughout financial markets and the credit markets and the like. So to me, I just think it's a bit of a sideshow until we get there.
Karen, I don't know that any of the lawmakers are paying attention to what's going on in the markets. Do you think they are?
Well, they do trade stocks.
They sure do.
Well, we know that. We know that.
So they're very focused. I do think they get nervous when their constituents get nervous, and to the extent that their constituents are invested in the market, I think that they do care about that. But they feel like, oh, we got all kinds of time. I mean, you know, May 9th, we got all kinds of time. Why do we need to do anything? I think it was good that Yellen sort of, I don't know if it was artificially or not, sort of made this June 1st deadline, because I don't know what was going to change if it was later. So hopefully we'll get something done. But I'd be very, very surprised. I think the least likely outcome today is that we see anything productive.
Tim, do you have any concern about what's going on in the Treasury market? Some of these short-dated Treasury yields.
4-month
really
bills
spiking?
trading more than the 6-month T-bill. And yes, and I do think that the Treasury markets are more susceptible, and certainly, look, the stock market is showing no sign of concern on this. I'm going to say I think stocks haven't priced in 1 iota, whatever an iota is, not 1 basis point, not anything, and that's concerning, because we're coming out of a period where I also think we've had the best of the earnings that we could have seen from the most important companies in the market. And so I think that the bond market is telling you more about where leading indicators are in the economy. Bond market's telling you we are moving towards a place where the economy will significantly weaken the curve. We talk about the inversion all the time. I just feel like markets have not priced this in, but like everybody, I expect an 11th hour decision, especially because the public is of the view, whatever our politics are, I think the public is of the view is that each side is culpable here, and that each side has a role to play in that. And that may be why something is actually more negotiable than it appears right now. Today, I think, is theater. We're going to hear all about it maybe for the next hour, what's going on in Washington. And it's fascinating, but I think markets should be concerned, just because I see us up near the edge of a really a 6-month range on the S&P around 4,200. Now, maybe if we're holding this range and at some point you consolidate that level, I think the bulls will tell you that you're actually setting the stage to take it through and at least challenge 4,350 on the S&P. But again, we're coming through earnings season where we've had very strong numbers relative to expectations by the most important companies, and yet here we are with this issue.